Well, welcome everyone. I'd like to get started here and welcome you to our presentation. We want to first acknowledge that the Homestead Investment Cooperative acknowledges that we stand on the traditional territories of the Neheo, Dene, Nakota Sioux, Anishinaabe, Niitsitapi, and within the Métis homeland under Treaty 6. This land, a historic gathering place for diverse Indigenous people, shapes our commitment to fostering innovation, cooperation, and shared growth. We honor the enduring presence and deep connection of Indigenous peoples to this land, drawing on their traditions of resilience, respect, and community to enrich our collective endeavors in Edmonton and across Alberta. So I'm actually in Treaty 8, but because our project is in Edmonton, we are doing this land acknowledgement for Treaty 6, and we look forward to working with treaties across Alberta. So this is the presentation on the investment cooperative for Homestead. Thank you everyone for joining. Just to give an overview, this is the investment of the first building in a portfolio of cooperatively owned Alberta real estate assets. That's going to be powered by co-working, and it's starting right in Edmonton on the historic Jasper Ave. So the plan is to close on this project and start with this at the center of our province in the capital city, and then expand to other areas of the province based on our investment group that we gather, where we see opportunity and where we see the energy from entrepreneurs. So why did we choose a community investment cooperative? Well, for many years, I've been part of the ownership of the building for 10 years, and I've been asked by so many people that I know and entrepreneurs that have worked in the building, how do I become an owner of a building like this? How do I become an owner of a space that I work in? And the traditional real estate models in commercial real estate create a lot of barriers, particularly, especially financial. And so when I started to investigate options to remove those barriers, the investment cooperative model came up. And what it does is it creates local empowerment, because we can sell shares for, amounts of like $10,000 as the minimum amount, versus in traditional commercial real estate, you might need to have 100,000 or 500,000 to participate. It creates shared prosperity. So through the investment cooperative community, when all ships rise together, we share in that prosperity together. The social impact piece, that's where the entrepreneurial network and the co-working network comes in, where we'll get to connect through various events and annual conferences that we'll be holding to create those relationships and help each other's businesses grow. The democratic decision-making model, which is one member, one vote. Greater political influence. So we are hoping to attract the brightest minds and greatest innovators in this project, in this province, and creators and doers and people that get stuff done in this province. And those are people that are going to have significant influence in the future. And when you pair that with a real estate portfolio, we are expecting our cooperative to have quite a bit of influence in this province in the future. And then the long-term vision. This is not a short-term investment or a short-term project. We're looking for investors that are looking to invest for 5 years minimum. And we can see in the next 20 years growing a real estate portfolio that is quite extensive across the province. So it starts with me. I'll do a little introduction on myself. My name's Tegan Martin Drysdale. I got an opportunity to be a part of this building back in 2013, so over 10 years ago. I was interested in it because of the history. So it was the home to CKUA. It was built in 1909. There's not many buildings like it left in downtown Edmonton because a lot of them were demolished to make way in the 70s and 80s for the big towers that you see downtown Edmonton. And I was starting a business and I didn't want to work alone. And I'd seen the model of co-working spreading across North America. And I had visited a few co-working spaces in some big cities across North America. And I really liked the idea of working with a like-minded community, helping to grow your business. So I founded the Homestead cooperative business back in 2014. I retrofitted the building which I'll speak to next. And we've been the home for a number of companies and social enterprise businesses and not-for-profits and for-profit businesses, government entities have all had space within our building over the last 10 years. So who's behind this? So when I was looking at the opportunity to buy this building, I met with Don Iveson, who we've been friends since 2019, and was looking at the different models that we could create to build an investment community with this building. And it was through those conversations and asking for his advice that he said, "When are you going to invite me to join you?" Because he liked the idea so much and just liked the idea of building a community around real estate investment. So we started our journey in investigating the options, decided on the cooperative, and started to build out this model. Then we started to grow the board. So we had Jackie Cardinal join us, who's on this call here, founder and CEO at Naheoen. We got Kyla Kazale, who's co-owner of several businesses, but particularly Foods Repair Shop, which is actually a tenant in our building at Alberta Block. Adam Rosenhart, who's co-founder of Adverb Communications and has a marketing background. And then we've also added Heather Kirschbaumer, who's founder and CEO at Golden Acre Seeds up north here in Fairview, Alberta. And Ahmed Abdelrahman, who's co-founder and COO at Solus, a fractional talent marketplace firm. So that is our current board. So a little bit more about the building. So as I mentioned, it was the home to CKUA since about the 1950s. It's got a few murals left on the building that showcase that. It was also home to one of the first locations of ATB Treasury Branch in Edmonton. So you can see from the signage in this black and white photo. It was home to entrepreneurs, and like lots of musicians and artists have come through this building's footprint. When we took over ownership in 2013, we did a deep retrofit. So that meant we stripped everything back to the structure. We took out all the old operational systems, the mechanical, electrical, because they were, a lot of them actually original from 1909. The original boiler was still heating the building. We took out the windows. So we added in a whole bunch of more insulation. We added in new triple pane, high performing windows, high efficiency boiler system, LED electrical. So to really position the building for the next 100 years and create a low operational cost situation. It's currently leased with 4% vacancy. It's currently appraised at 8.85 million. And we have the opportunity to add a rooftop patio that was planned during the renovations structurally. So we have everything in place to create a beautiful rooftop patio in the future to add more revenues. So about the market in Edmonton. So currently vacancies in downtown Edmonton are decreasing in the last year here. And there is few opportunities for smaller investors and companies to participate in the ownership of commercial real estate in Edmonton. So that downtown Edmonton is typically owned by, buildings are typically owned by REITs or by high net worth individuals. Your areas of focus is going to be growing in any underserved companies and organizations, providing services that go beyond co-working to create a community and creating the investment opportunities for our members and for the larger community as a whole. We believe that if we have stronger tenants, we have a stronger building and a stronger co-op community. And we are expecting some of our tenants actually to invest in the building as well, like Kyla herself and myself as well. We expect to be helping grow companies, which is actually occurring in our co-working space and has been occurring over the last 10 years. It is common that we will see companies increase in size, double in size, and outgrow our spaces. We do make a major contribution to our economic post-COVID revitalization because we are helping grow those companies. We will create wealth for investors and tenants by allowing them to invest in the real estate piece as well. And we will expand the model to other communities. So we will be tapping into our investment community, looking for other projects that they want to bring to the table that they think would be good investments, but also have a strong, engaged community around them wherever they're located. For our member services, and this is more particularly in the co-working side, we will be providing spaces that they can grow in, ongoing peer mentorship through what we call our kinship program, and also from a mentorship program we will be developing out through our community. Connection to social enterprise and social impact organizations across Canada, because we have those strong networks. The ability to invest in the real estate owned by the co-op, so that is currently being offered to our tenants in our building. Access to our co-op investor network, so we do expect there to be events and conferences and showcases where we'll be able to showcase the businesses that are growing in our different locations and connect them with our investor network. And then we will be building out a co-op alumni network as well, so that even people that leave our co-op are still connected and still aware of all the different opportunities that we're bringing to the table. How will we build revenue? Well, the main source of revenue for the building are the rents from the main leases in the building. We will be doing premium professional development events and doing tickets to those, and we started to host them this last fall. We have a beautiful event space in the building and Foos Repair Shop that can host, Foos Repair Shop can host up to 300 people. So it does give us quite a bit of room for larger events. And then we also have smaller spaces throughout the building as well. We do intend to eventually have brokerage fees for spaces that tenants graduate to. So if they outgrow our building, and if our ideal would be that they move into another building that we are participating in, but if not, then we would get eventually a brokerage fee to recommending them to other landlords. We already do space rentals on our current amenities, and then we can add the future amenities such as the rooftop patio, which we've already been asked in the past to have weddings get hosted up there and stuff. So once it gets built out, we do expect that to be a high demand space. And then future real estate acquisitions. So this current project is a $9 million deal structure. We're looking at two scenarios. The ideal scenario is to raise 100% of the capital through private investment. This would allow for opportunistic refinancing and sooner expansion to the next building. So if we raised 100%, bought the building, we could then negotiate really favorable financing terms with a conventional bank, and then we could place the money that we take out of the building into the next group of buildings that we would be looking at buying. So it allows us a quicker expansion opportunity if we go with scenario one. Scenario two is we raise the majority of funds still through private investment and finance the balance up to 4.375 million, which also the benefits of that is that you achieve more leverage with your investment. So we have done this raise in two phases. So we started with phase one with friends, family, and close business associates. And we have started to approach the first $500,000 with that phase one. And phase two is what phase that we're in right now, which is the public offering memorandum. So for the first 1 million raised, we have offered a 4% discount as a thank you for being an early adopter for this project. And that's on the face value of the shares issued. So for example, if you bought a $10,000 amount of shares, it would cost $9,600. If you bought $100,000 in shares, it would cost you $96,000. And then once we go past the first million and we go from 1 million to 2 million, then the incentive drops down to 2%. So still an incentive, but just not quite as much. So how we've structured it is we have three classes of shares. We have one Class A membership share, which is your voting share. So one member, one vote. And that's a $250 one-time fee. Then you have to choose between two classes of investment shares. Class B, which is a $10,000 minimum in $1,000 increments. So each share is worth $1,000. And then you have your Class B, which is for $100,000 and more investors. And those shares are purchased in $5,000 increments. With the current cash flows of the building, we're projecting annual returns of 6%, which do not include the gained equity in the building over time. So the founders' incentives and governance, the founders are serving as the initial board. We have fronted all costs to date, which are right now tracking at 86,000 and have committed to 280,000 in share purchases. We will not receive any management fees, but we are receiving incentive shares for our efforts only once we close on the building. So we have to achieve our end result in order to get any of those benefits. We currently have space for 9 directors and we are at 7. So there are 2 additional directors to be added yet. One of those positions will be for the Class C investors. They will get to vote at the next AGM for their representative of the Class C investors, and they will have a seat on the board. So your role as an investor is to join our mentor community and help the next generation of leaders. And you will get your first dibs at looking at further investment opportunities that we present from other properties, but also investment opportunities that might come from our network. We would like referrals from like-minded tenants and mentors and investors through your networks, and participate in the one member, one vote general meetings to make key strategic decisions with the co-op community. And a lot of those key decisions that we expect are our expansion opportunities. We want to engage our larger investment community in any growth opportunities and expansion and where we go next and what deals are the best ones to pursue. Another incentive is the first 100 member investors will receive recognition, a physical recognition in a prominent place in Alberta block. So that could be the lobby. We've also talked about actual bricks on the building. And then you also provided an original H100 keepsake for display in your home or office as a kind of commemoration of our first inaugural project. So just running through the offering terms. So once again, it's the 3 classes of shares, Class A, Class B, and Class C. The minimum raise that we're looking for with the financing option is 4.625 million, and the maximum is 9 million. The voting rights are 1 member, 1 vote at an AGM. And again, the Class C shareholder group may elect 1 board member to sit on the board of directors. The rights on dissolution are a proportionate share of net assets after liabilities when there's a sale of the building. Oh, oops, going back, all right. Dividends, board of directors will to issue investment shares based on annual operating results. Time horizon, minimum 5 years before redemption, unless extraordinary circumstances. One question that has come up is after 4 months, you can sell your shares to a family member or someone else within our community, but redemption to the cooperative itself will be after 5 years. So that would be if we were to sell the building or you wanted the cooperative to buy your shares off of you. Use of the funds raised. So for the scenario where we do financing, we would place 4.375 million with the lender, and then 150,000 goes to closing costs and 100,000 as working capital, just as for cash flow in the building. And that's for the $4.625 million raise scenario. For the larger raise scenario of 9 million, we would put the 8.75 million down payment for the purchase of the building, and then have the 150,000 in closing costs and 100,000 in working capital. This investment is RSP and TFSA eligible to the Canadian Workers Cooperative Federation. And this offering is open until December 17th, 2024. We do have the opportunity to extend it, but right now we are not looking to do that. So why does this matter? We believe that Edmonton, Alberta is a special place. That's why I live here. That's why I raise a family here. We believe that Alberta has a strong community of builders, creators, and investors and innovators. And we think that we can make a strong impact if we are strong together and we build a strong community. And we believe that Homestead Investment Cooperative will come to represent a beacon of growth and prosperity in our province through this real estate portfolio and this network that we are building. So now I'd like to turn it over to any questions that anyone has. Well, if you have any more information, you can if you want to get any more information, you can email grow@homesteadcowork.ca or call or text 780-222-7420, and we can get you more information and send you the next steps to sign up to our investor portal. Thank you very much.